Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like these free videos and analysis we give to you on a daily basis, it's really nothing in comparison to the membership you get once you sign up and join with the premium membership. Once you sign up and join with that premium membership, you're going to get the instant profitable trade alerts that our current members are getting on a daily and weekly basis. It's a great opportunity and we'd love to help you with your trading. Alright, so let's take a look at these charts here. We're going to take a look at Nike here. And what I want to point out here is this huge level on this chart, alright, on this stock. So you can clearly see it's a big level. Going back here, 2016, about a year ago, saw a bounce there. Actually, it's been more than a year there. Right here, got a bounce off that level. Obviously, we dipped a little bit below it for just a couple weeks and then bounced huge off of it. And then zooming in here to May of this year, huge bounce off of that level. Again here in June, we bounced from 51 all the way up to $60 right here. And right here, what we have is clearly another reaction to this price point. We saw a bounce off of it right here and then a retest of these levels right here. I think that Nike is going to head higher from here. Because nothing's really changed that drastically for this stock. The support is still a nice support level. Another thing I want to mention too is we've got positive divergences on both the MACD and on the RSI. So positive divergence, I'll go ahead and I'll draw that for you so you can see it visually. So here is that positive divergence. You have MACD trending up as price headed lower. Alright, so that is a positive divergence. Here's another one on the RSI. We've got a low here on RSI and a higher low here on the price, and then a lower low on price, and then here we have a higher low on RSI. So I think that with these positive divergences showing against this support and that we already have a nice dollar bounce off of it, I think this bounce is going to continue for Nike and it's going to head higher. The first major resistance is up here near about $54, so that's a conservative target for Nike. The next one is SBUX, and SBUX, you can clearly see it's reacting to this resistance we pointed out to you in the past. Here it is from that gap down high. Here's that high getting rejected. Here we are again, but we're coming into this support level right here. You can see we got a bounce there, right here, and we're coming into that level right now. That's an uptrend line. Also, the 50-day moving average is right there as well. So definitely want to keep that in mind for SBUX. The next one we're going to take a look at is Goldman Sachs. Goldman Sachs today, first of all, MACD bear cross right here, and we've been pointing out this resistance for quite some time. We said that Goldman Sachs was likely going to head lower based off of the resistance. You can see there's previous resistance here, and then it turned into support right there and broke below it. So now this is a level of resistance. We got rejected right here. We did some videos back then. We said it was going to get rejected. Here we are again, making new lows with a big bearish engulfing candle on huge volume. That's not a great look for this stock. I think it has a little bit lower to go, but we're coming into some pretty major support below. Anywhere between 232 to 229 is going to be that support level below, which I do think that once we get down there, we're going to see some kind of a reaction, some kind of a bounce against that support level, at least initially. The next one we're going to take a look at is Netflix. And Netflix here, clearly, not the reaction to earnings that bulls wanted to see. Again, not a huge dump or anything like that, but to me, with this heavy volume up here and the poor reaction to earnings, to me looks like Netflix is going to putter out here. It needs to consolidate a little bit. Not saying this is going to be the top or anything like that for Netflix. We really don't know at this point. But my theory has always been, and the theory of many other smart people, is that if earnings can't push a stock higher, then what is going to push a stock higher? The earnings. We know everything about the company. They tell us in the conference call. We see it in the numbers, and this is the reaction to that, and that's what drives stocks higher and lower. And right here, you can clearly see we puttered out here. So to me, Netflix could just be needing a rest here before potentially heading higher. But right here, I don't see the risk versus reward favoring the bulls at this very moment in time. The next one is Tesla. And Tesla here, we've got an interesting level here that is very familiar to Tesla. You can see last time we broke over this resistance level. We saw a nice breakout. In fact, we called for the long here for you guys on these free videos, and it hit our target at 386, and we took profits there. And obviously it dropped after that, but that doesn't matter because we're already out of that trade. But we're coming into this resistance point once again, and if you notice here, we're holding really tight against that resistance point, and high and tight against that resistance point. And normally when it does that, first of all, it means that most likely it's going to break out over that resistance. And it also means that it's creating a lot of energy buildup, because when you have these big, wild swings, you expend a lot of energy. But when you come down here and you barely move up and you just hold pretty much sideways trading right against that resistance level, you're building up energy for the next big move higher, similar to what we did here. You can see there was that sideways trading right here. And then we saw a nice little breakout there from about 360 to about 390 for about a 10% gain right there. So here we are once again, and we're even tighter than we were over here. You can see the range was, zigzagging here, and you can see right here, the last few days we've just been trading in a very tight range right there before the breakout. So to me, this has a lot of potential. You can play the breakout. So if we break about 358, then I think the stock is going to explode higher. That's a big if, though. The next one is NVDA. NVDA, very, very bullish here. To me, now is not the great time to initiate a new long. If you're already long and you've been following these videos, we've been very bullish on NVDA, then congrats. You can use this trend line for some new entries. Started back here, got a bounce there, here's a bounce, there's a bounce, grinding up against it here, and I'll just extend that so we can keep using it right here. So if we fall back down into like the 185 range, to me that's a great buy zone against this uptrend line that has kept NVDA in a really nice uptrend. The next one is AAOI, and just a reminder here, we liked AAOI for a short before earnings, and the reason is because we got this big gap down on heavy volume. You can see that volume here. It's the biggest volume day ever on this stock, and we weren't able to ever recover. You can see we just kind of trended down and traded sideways, and we never broke this price point before the next earnings, which happened just at the end of last week on Friday. And usually when that happens, 9 times out of 10, when you get a reaction like this, and then between the time of the next earnings that it doesn't really recover over that price point of the gap down, then it heads down again on the next earnings. So definitely have to watch this stock. The trend here has been broken on on this stock, and we're also below the volume point of control for the stock. You can see that big, huge line right here. That's the volume by price right here, otherwise known as volume profile. Same difference. And here we are below that level. All right, so to me, this stock in the long term is more likely to be a short. But here in the short term, I think we can get a bounce from this price point. You can see we're clearly reacting to it today. And then you can see it was support back here, and it was this gap up level right here. So short term, we could be heading higher here. But to me, that should be used, or could be used, as a great re-entry on a short up near about 56. So if we retrace up to about 55, 56, anywhere up to, even $60, to me, that's a great shorting opportunity. Back up into this resistance point. I think this stock is going to head lower in the long run. So re-entry to short up there. But remember, right here, we're right here at a support level that I do think it could get a reaction from. So definitely want to keep an eye on that level. So thank you for stopping by and watching the video, everyone. Again, if you're not already a member at thetradinganalyst.com, visit us on the homepage, get to know us better, and then sign up and join the premium membership. As soon as you sign up and join, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily basis. It's a great opportunity, and we'd love to help you with your trading.